How to compute advance tax? First of all, the assessee has to compute the gross total income. Gross total income means total of all the 5 heads of income. That is income from salary, income from house property, income from business, income from capital gains, income from other sources. So first the assessee has to do the total of all the 5 heads of income, which is called gross total income. From the gross total income, the assessee is eligible for deduction under chapter 6A. The sections under which the assessee can claim different types of deductions are ATC, wherein the assessee can claim deductions of insurance premium paid, investment in PPF, ULIPs, tuition fees, etc. Under section 80D, if he pays any mediclaim, he can claim the deduction. If he makes any investment in infrastructure bonds, the assessee can claim deduction under section 80CCF. Under section 80E, if the assessee has paid any education loan, he can claim the deduction. If the assessee has made any donation, he can claim the deduction under section 80G. If the assessee is a disabled assessee, if he has any disabilities, then he can claim deduction under section 80U. After doing such deductions, after making such deductions, the tax liability is to be calculated on such resulting amount at certain rates which are specified under the Income Tax Act. The tax rates for individual HUF, AOP and BOI for the financial year 11-12 is, if the assessee is below 60, for the males the tax slabs are up to 1,80,000, 1,80,000 to 5 lakhs, 5 lakhs to 8 lakhs and above 8 lakhs. For the female, the basic exemption limit is 1,90,000. For senior citizen from 60 to 80 years, up to 2,50,000 it is exempt. For senior citizen for 80 years and above, up to 5 lakhs it is exempt. And the last column reflects the rates of tax. So as per the slabs and as per the rates which are given, the tax liability is to be computed. Tax rates for partnership firms is 30% plus education cess plus higher education cess of 1%. Same way for domestic companies, the tax rate is 30%, and surcharge would be applicable only if the total income exceeds 1 crore of rupees. So as per these tax rates, the tax liability is to be computed. From such estimated tax liability, tax deducted or tax collected at source is to be deducted. If your net tax liability is more than rupees 10,000, you are liable to pay advance tax as per the following schedule. The first column reflects the due date of payment of the advance tax, which is 15 June, 15 September, 15 December and 15 March. In case of any assessee other than corporates, the due dates would be only 15 September, 15 December and 15 March, which is reflected in these columns. Say for example, for companies, by 15 June, one has to pay 15% of the net tax liability. By 15 September, one has to pay 45% of the net tax liability. By 15 December, it is 75%, and by 15 March, it is 100%. In the same way, in case of non-corporate assessees, the tax rates are 30% before 15 September, 60% of the net tax liability before 15 December, and 100% of the net tax liability before 15th March. An assessee can revise his estimate of the advance tax liability after payment of any installment and pay the balance advance tax accordingly.